this dollar signal is really important because it tested the year-to-date lows yesterday and held a higher low. So not only did it hold a higher low, it's up this morning and is bouncing again, signaling a series of higher lows, which is the beginning of, I think, the biggest risk to the market, which is a dollar that's not only stops going down, which it has in 4 of the last 5 weeks, but on declines makes a higher low, and consensus continues to be bearish on it. Prospectively, you could easily see the dollar basing and going up. Now, that would be the biggest risk to macro markets, would be a rising dollar as opposed to one that just arrested its decline. So again, of all the things that people are not talking about this morning, and there are many. Driving in this morning, I was stuck in traffic, unfortunately, so I had to listen to the likes of CNBC and Bloomberg. These people are talking about absolutely none of this, just to be clear, which is awesome. It's awesome for you. It's awesome for me. If they weren't there, we wouldn't have an opportunity to make money. I think it's a great opportunity if we get the dollar right. We shorted the euro yesterday in real-time alerts as opposed to buying the dollar outright, but buying the dollar outright might indeed be my next move. Again, euro signals a slightly lower high. Slightly. You know what that means. Slightly still matters. It's slightly, and I'm talking slight, 1, 2, 3. Okay, you got that? Now, what happens if the euro fails here? Because the European central planners, the ECB guys, the guy from Finland this morning was like, oh my God, he's dovish. I mean, so we're on the continuum of going from hawkish to dovish in Europe as the data goes, particularly inflation data goes from hawkish to dovish. You can see the European data this morning. And by the way, this is all part of the dollar analysis. You can't have a view on the dollar if you don't have a view on the euro. And you can't have a view on the euro unless you have a view on European growth and inflation. But you can see there's more red than green this morning. And your green is so slight, like Spanish CPI up to 1.2 from 1.1. Okay, look, first of all, that's nowhere near where it needs to be for the Europeans to be tapering. And then once you look down, like at the bottom, in the first box, Italy from an economic sentiment perspective and Eurozone by and large from a confidence perspective, those are very near-term data points. Those are March. So again, those look more like the stock markets in Europe and the economic data itself. So again, that's another reason to be shorting the euro this morning. Hopefully you did yesterday when it was higher.